Hey traders, this is Christian from Tribeca Trade Group, and it is Monday, January 25th. So, wow, some crazy action today. A lot from the short squeeze side, some interesting moves in that space, and just overall, I thought that this was one of the biggest short squeeze I think that I've ever seen, and really just a lot of names just seemed like they were attacked, just without really, any major reason other than that they have big short interest. So, this market is not dull, and it continues to kind of amaze, and we're seeing different things. I mean, for as long as I've been doing this, I don't think I remember. A type of short squeeze and just anything that had high short interest. I've seen this before where certain stocks that have short interest, like a group of stocks, there's a catalyst, there's a particular catalyst there, and a short gets squeezed and so on and so forth. But I've just never seen it widespread like this, where things like what I like to look at is I know that there's a decent amount of retail that has short, meaning the retail ETF. XRT is the equally weighted retail ETF. So if you look at some of the performers in this XRT ETF, of course, the one that everybody's been hearing about is GameStop, no doubt. I'm not going to talk too much about that because I think everybody's saturated at this point with hearing about GameStop. But if you look at names like so most of these nine, this is designer brands, this is PetMed Express, Children's Place, Macy's, Car Parts, Rite Aid. You just go down the list, and if you look at these names, they all have high short interest. Uh, so again, I would say this is incredibly interesting to see this take place. Did I participate too much in this? No, not really. I mean, it's not. I like to have multiple reasons why I enter a position, and I get there's so much momentum in this type of thing. It's tough to not participate in it. For me, combing through and just looking at names that have high short interest and then saying which one is going to happen next is not exactly my trading strategy. But like I said, nevertheless, this has worked very well, and we talked about this on Friday too. But they are really going out, after names that still have short interest. Now, the other thing that I find that's interesting is this has been going on for a while in terms of names that have been outperforming have been high short interest names. So if you look at this, this was put out by Bianco Research. And kind of interesting to see the total number of shorts reported on the New York Stock Exchange. This has been decreasing now for a while. So this is, in my opinion, this has been going on for a while, but I don't know, maybe this is kind of the pinnacle of this, right? The other chart, there is this index too that Goldman has. I was actually trying to get the membership of this a few months back, and I never really got it. But I think it's just this particular one is just equally weighted, the most 50 shorted stocks. So, what does this kind of tell you at this particular pattern, right? We know that this has been going on for basically almost a year, but it really has gotten to the point to me that it looks a bit to the point of pretty overbought the short stocks. So again, I just mentioned the XRT and how there's a number of high short interest names in there, in particular mall names and small retailers that have been closed. But to me, I mean, this kind of looks like a little bit of a capitulation after a big move. So you could see the volume in this ETF today too. So usually when I see something like this, and I could be completely wrong, and also I would wait for some confirmation. Confirmation meaning a move below the like a 5 period moving average, which is what this price has been hugging, basically since since the beginning of the year. For confirmation, I would watch for this to kind of sink below. But to me, yes, it does look like the could be the last move for a short amount of time, for in the short run, I should say, right? A couple other names that I saw some similar looking patterns is like something like this, FUTU. This is a name that's, a Chinese financial name that has gone up, tremendously and just hasn't looked back at all. From $44 went all the way up to $131. To me, if you look at the RSI, this is overbought. This is very overbought, right? And when something gets to, we've seen some names get too close to a 90 RSI, and they've pulled back. This is close. It's an 83. It's not that extreme, right? But I've talked about names like Fubo before when they've gotten to a 90 RSI, right? So a similar name like this, when this got to a 90 RSI, this was a short opportunity. Now, the only problem is it's on paper, it was a short opportunity, but I shorted this one a little bit, made a little bit of money off of it. I would be doing that too, I think, with this name, because again, it seems like big, huge volume after a monster run. My guess would be that this thing comes in a little bit. However, there's no easy way to really short it. This short is going to be extremely expensive. The puts are extremely expensive. If you put on a put spread, you run the risk, because the first options that are there are February. You run the risk that your short strike could have an assignment to it. So there's no real easy way to kind of do this unless you're an institution and can get a preferential rate on short. But I think a number of names have kind of run their course. And I took some action on this today. I didn't, first of all, gap ups are always a little bit difficult, right? And we had a gap up in the Qs, right? And the Qs, if we go back to my spreadsheet for the day, the Qs finished fine. They did give back a little bit of that, early start that they had. They were up about 1%, but they did give back about 25 basis points of that. Interesting, the small caps, you just cannot keep these small caps down. We saw this on Friday too, where the small caps looked like they were going to kind of push over a little bit. And, there continues to be buyers that want to buy the dip in this stuff, right? This was Friday's price action all the way, down to here. And look at what happened in the from 9 o'clock in the morning, I guess. I'm sorry, pre-market is where it sold off. And then look at the move at the end of the session on Friday. So it is really difficult, I think, to kind of get in the face of trying to kind of play the other side of this stuff. For me, I think I've seen enough of some of these extreme moves, and I decided just to exit some positions today. And, a decent amount of them were for profits. A couple of them were new positions that I put on last week that just hadn't started to work yet, and I had it, or a couple of them that were close to a stop price, and I just decided to take off. So that was my day. And I think overall, looking at the week that we have, this is not just this week, but next week. Obviously they're going to be big. The next 2 weeks will be very big for earnings. I always view swing trading as a little bit harder during the majority of when the names report, right? Because now we do have names that report through the quarter, basically. But we have a big chunk. I think we have 25% of the S&P reports this week, and then a big portion in the beginning of next week too. So that is in the back of my mind, as well as what I think is probably even more important is the Fed meeting on Wednesday, right? So, we don't know what Mr. Powell, this is something that we talked about in the macro video, but we don't know what Mr. Powell is going to do. We know that part of the fuel of the fire has been, what the Fed is doing. So this is Wednesday. Of course, the announcement will come at 2 o'clock, and then the presser, which really where more information comes out usually is at 2:30. So that is that. And again, if you want to look at the Fed balance sheet, they're kind of, we'll get a good sense, I think, of if they're thinking about tapering, if they're going to comment about this market speculation. But clearly, this is this is what the Fed balance sheet has been doing. It's been expanding, and not at the same pace of what it was last year, but it is still kind of moving in that direction, right? So inserting liquidity into the market, making things a lot easier to, easier market conditions. The question that I have is that going to change? Or will, even if it doesn't change, will there be some type, what's even more important is what will be the market reaction of what Powell says. So for now, I decided to take some chips off the table today, something that you really haven't seen me do in a while, and just decide, and here's a couple trades that I put on this morning, from the weekend watch list. They just did not work, right? I was looking for crowd. Again, I'll review the losers. I know nobody has losers on Twitter. But I had a couple today. This I was looking for this to kind of come in here and start to kind of turn the corner and continue higher. Now, the issue with this is some of these names that I'm looking at, they're shallow pullbacks, and they may be in consolidation territory for a while. Another one that I was looking at is Carvana, which also had a decent short interest, or I believe has a little bit of a short interest. But this just wasn't its day today either. I thought we might start to see this kind of gravitate back up after a short pullback, but this just didn't. It wasn't its day, so I abandoned those trades. I started to see I just had an instinct that says I just don't like how far these names are going up. I looked at the XRT ETF up well over 4%, and I just said this is too extreme for me. And I just started to take some trades off, and I started to make that decision, around. I was taking some targets and some things I put on last week. Neo, which was a trade that I added to last week. This LU, which is not Lucent Technologies, by the way, but right around this 1050 mark, I said, you know what? I made some money. I was looking for a run up into earnings for PayPal. I made some money in that, and I just started unwinding, at around a little bit before 11 o'clock, before we kind of got this big swoosh down, and then I was still unwinding, as this was right around when I started to unwind, but. Yeah, I mean, this is what I've been referring to as that I think that we could see some hiccups. Now, again, it's interesting that we recovered all the way back. So there are people, that shows me too that there are still funds, investors that are waiting for market dips, because this is a pretty decent, by the dip. We've seen this a number of times where this is the start of a pullback, but certainly you can't make that conclusion yet because we went all the way back to where we started the day. So you have to kind of decide for yourself. And of course, this video is for information purposes only, just education, not giving out any recommendations or anything like that. But you have to make the determination if this is something that you want to kind of continue to try to ride the trend, or lighten up positions, or press here, right? And I don't have the answers to how this is going to work out. I could tell you, for me, it just seems like that I just saw too many names that seem like they're not, to me, quality names that just have very high short interest, and they seem like they're being attacked. Now, I just don't think personally that's my market environment. So I acted upon that. I did not, I was not able to take off every position, at a great price, but I'm now in a position where I can play a lot more offense. So if this market does want to pull back a little bit because Powell says something, or the earnings announcements that we get aren't as good as what everybody is expecting, clearly we have seen that with some names, right? If you go through and if you look at some of the names that have been reporting, the reaction to me hasn't been stellar, right? If you look at like a CSX, right? Or, I know this is lower beta, but Procter and Gamble, and we're still too young in the earnings season to figure out if it's just a consumer staples thing, or if the results, there's just the expectations are a little bit too high into that. So I would rather sit on my hands a little bit and observe. Now, I know most traders right now in this market are not doing that. They want action, right? So it's tough right now to do that. I think it's challenging, but I think for me, I think that's kind of the right tact for me to do in the short term. Now, it doesn't mean I unwound. I did not unwind 100% of my positions, but I did take off a decent amount of them. Names I'm still kind of watching and just wasn't convinced, enough to kind of take a position. A Zoom video is looking interesting if we can get above the 50-day moving average. Another example of a short name today. Beyond Meat had a huge day today, up 12%, broke out of here. Jemiah, which I unwounded my position, but this thing still finished very strong, and there was a little bit of call buying in the afternoon in this one, so perhaps this can continue to go higher, but just very strong. And then also, what's kind of interesting today too is look at what biotech did today. It finished on the highs of the day, up 3%. So you would look at this and think that nothing major happened for the day, just a usual day, a little bit of a buy the dip day on Friday, and it moved higher. So we'll see. And then of course, one area that people are not talking about too much is utilities had a big day, and they actually closed first time that they have above value for the month. Now, what is kind of the catalyst for this is what happened in TLT today, right? I have been thinking that, that TLT is in a downtrend, consolidating a little bit, and I thought maybe we would see another leg lower here, meaning interest rates go higher. However, bonds really rallied today, so it'll be interesting. There is some implications. We're looking at the long end of the curve, right? So that will also move based on the Fed meeting. But it'll be interesting to see if this is just a little bit of a rally back. The other thing, too, which I know I'm not fully getting yet, but I would welcome a little bit of a further pullback. I just don't know if I'm going to get that yet. We know that February is coming, and February is a little bit weaker of a month in terms of a presidential year, in terms of historic how that works. But if you look at the numbers too, like the numbers that I saw for February is like down 1% or 2%, not down 5%, but down like 1%, which is not that big of a deal. But still, it might be a rocky road. And for me, again, I speak in terms of, what I do. I just thought after a really nice run that we've had basically since November, it was time, earnings season, and maybe I was a day late doing this. It would have been nicer to kind of do it, on Friday or even in the first 15 minutes of the day. That would have been perfect. The first 15 minutes of the day to unwind a bunch of positions or, sell into all that strength, which again, I did try to do this morning, but, and then kind of observe for a good portion of the earnings season, as well as Powell's speech, and be lighter and be ready to kind of play offense into this couple of weeks rather than worrying and playing defense. All right. So that's it for today's recap. Thanks for watching, and I'm sure, I'm not really showing that many setups. I want to see how things kind of develop here. I don't want to rush into anything yet until we have more of the earnings come out this week. All right, guys, thanks for watching. Have a great night. See you tomorrow.